Hi, I'm Mark Rosano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So if you're watching this, hopefully this won't be the last show, but we're not sure how things are going to continue, if it's going to be YouTube, just podcast. We'd love to hear from you. If you know anyone that would like to sponsor a show, we do have a great fan base, a great viewership. So if you'd like to be a sponsor, we'd love to have you. So with that being said, there's some brief updates that we should hit on prior to getting into just the Frac Spread Count show. Here, it looks like the ground offensive has begun in Israel, Gaza. We've been talking about, I was actually writing the insights yesterday and starting those up, and all of a sudden things went, got pretty aggressive. There were some hints that it was going to happen. They turned off or they jammed all of the phone and internet coverage. Then we had a very extensive bombing raid, and it wasn't just one-offs, but it was a multitude, continuous. So it looks like things are starting. It looks like some attacks have been carried out in response to two U.S. military bases in Syria, and from what I understand, we already have assets in the air to strike back. So it's going to be a very precarious next couple of hours as things launch, hoping for everyone's safety. Hopefully civilian casualties are minimal. With that being said, we're going to cover some of this as well as we go forward, especially as we go into the next few the next few slides. So here, when we look at getting back to the Frac Spread Count show, and then we'll go back to geopolitics in a few minutes. Here you can see that the Frac Spread Count jumped by 6 to 275. For those that watched us last week, read the insights, this is what we were expecting. We do expect to get to about 280, 285 as we get into November. And the reason why we're saying that is because typically, seasonally speaking, you get additional activity happening at the smaller basins, which is really the biggest driver of the activity base. There was an increase in Anadarko, but Permian was held flat, and we do see about another 8 or so spreads coming on in the Permian, which again is going to get us to that 280, 285 range. And we don't see us going too much above it. Maybe there's a week that it's higher, but realistically, things are going to be fairly limited as we go into the next one and beyond, then the next few weeks. And then then that leads us into Thanksgiving, which Thanksgiving through that January 1st is fairly light. When you look at rig counts, the crude oil rose by 2, gas dropped by 1. The Permian increased by 1, Eagle Ford by 1. So again, a lot of this, we did get another nice little bump in the horizontal, which again is just leading what we've been talking about, where we're getting into this balancing act. Obviously, we've had the movements by Iran in Iraq and Syria, put a little bit of a bid beneath crude, because then the U.S. responded. Now that you have Israel moving into Gaza, that's going to put that premium back to where we were talking about. We were saying that we thought 92 was going to kind of be that peak, what'll likely maybe move a bit above that. I think the biggest linchpin to where we go is going to be, what does Iran do? How is that reaction? What comes from the Houthis by way of the Red Sea? Obviously, the U.S. has deployed assets in the region to help deter and stop those attacks. But it's important when you look at what's happening in that global crude oil production and how as we've been talking about for those that have been following us for years, we've been discussing how things are getting lighter. But that creates a problem because we need those medium and heavies for distillate, for diesel in general. And that's why there's an opportunity when you look at the medium slate, and why there's that investment that continues to happen in some of these key areas. But it's important to also look at how the peak oil has changed, because now everyone's like, oh, peak oil, peak this. Peak oil is still far away. And unfortunately, or fortunately, depending on how you want to look at it, people describe oil, like when they talk peak oil, of liquids and black oil. We differentiate between the two because we do think that black oil has hit some sort of peak. The liquid side, the propane, ethane, condensate side is far from over. And it's funny because the same people that are trying to stop the increase of fossil fuels is actually the key piece that's driving the additional demand of petrochemicals and these components of addressing those different areas. And again, that's why we see this, we are not going to see peak oil. We're going to continue to see the demand for liquids. You know, we haven't reached peak oil demand per se yet, but the pivot is happening as you get more LNG taking from fuel oil. But again, it's just because it's stopped going up doesn't mean it's going down. Like we are by no means saying it's like, oh, we hit a peak, now it's going to drop off. No, that is not how this works. But when you look at the aggregate in terms of how the market looks at it, you know, we're going to continue to see growth because of that petrochemical side. Or in the liquids front. So it's interesting when you start looking at crude flows, because one of the things that we've been saying, we talked about in the EIA show, this is an updated chart, that Russian exports continue to rise on the crude front. That's going to continue to be the case. As we've said, they're struggling to export product. They're struggling to bring back additional crude flow, additional refined products and refiners, which is going to put more of that slate out there. But this is interesting. So China has now exported a record amount of refined products. India, this is the second most they've ever exported. You know, this is the fear, and this is going to be the crux to watch when you look at flows in the Asian markets. Because one of the things that we've been saying is they're buying a significant amount. You know, China bought more crude from Iran than it did from Saudi Arabia for the first time ever, which isn't surprising because Saudi crude is super expensive. Iranian crude is technically sanctioned, so it's going to trade at a discount. So again, China is looking to take the most affordable oil, which is Russian and Iranian. You know, they've been buying Venezuelan. Now the U.S. is buying more Venezuelan. So they're buying discounted crude, which then allows them to then go out and sell diesel at Brent pricing, or, you know, whatever multiple you want to use. And here they can make a great margin. So which is why we do think that there is going to be a fourth export quota. This is, typically the SOEs know before anyone else, you know, they're obviously still exporting because they know that there's going to be something else. The idea was make sure that there's enough capacity internally. You know, we've seen a slowdown in manufacturing, as we talked about in the Econ show in October. So there is that flexibility to kick some of that additional crude out. When we look at the additional driving data, Asian, excluding China, continues to fall. That's going to have additional pressure when you look at yields, just because, again, subsidies are falling. If subsidies are falling, you know, we look at Pakistan, you look at I think it was Indonesia, you know, you look at India, there's South Korea is keeping their subsidies for a little bit longer. You're seeing an increase in pricing, and that is putting more and more pressure in general in terms of where some of these flows are and the pressure that's going to continue to come. Europe, which again is just going to slow down demand, which is why it's going to be important to see how is China exporting, how is India exporting, and where is storage and where is that crack spread, because gasoline demand is still terrible. So it's the diesel side that's maintaining the crack, and if diesel comes down, you know, obviously this is going to put even more pressure. Europe is stabilized more along seasonal norms. You know, again, we do see some downward movement, but staying kind of where it was in 21, 22. The North America had a nice little bounce. You know, we do see a little bit of a slowdown, but again, we see it kind of holding at these levels, you know, obviously barring a bigger weather event in the near term. When we look at China, Chinese demand is staying right kind of where it was, which is tough because you can't really look at 22 because right after Golden Week, there was a slew of shutdowns. There was zero COVID policy was still there. So again, there's still some of that downward movement, which we do think is still going to continue and put pressure on things. So again, it's just, you know, here we are. We do see some downward movements, but it's still going to be well above 22 levels. One of the things that we want to touch on when you look at Russia, and there's the offensive and counteroffensive, and we talk more about this on the insights. You know, you've had Russia break through in specific areas. You've seen Ukraine break through in certain areas. You know, the underlying problem is you're competing against essentially a World War I trench warfare style. as we talked about on the Econ show, there's a concern about morale. There's on both sides. There's been videos of some Russian soldiers abandoning their positions, refusing to go back into the front lines. Again, there's the difficulty is, and there's no way for me to confirm what is a PSYOPs, OSNet, SIGNet. So, take it with a grain of salt. Obviously there's thousands of troops there. I think the line that was counted was about 315. So it just gives you an idea, though, that this is going to be a war of attrition, and that's unfortunate because the attrition are human lives. And that's when you look at some of these things. But as the Russia's bogged down here, that's why even though things are going to heat up in the near term in the Middle East, we don't see a connection between the two. And by connection, we mean in terms of this becoming a broader conflict and connecting out. We've moved assets into the region to keep that from coming to pass, while also trying to protect against assets, because there were some attempts of getting drones from the Yemen into Israel, but they did crash in the Sinai Peninsula. So then when we look at some U.S. data, which is when you look at personal income came down, we'll talk more about this if we do have an econ show. We'll find out, but we will talk about what is happening on personal spending and personal savings, which continues to slow. Real personal spending, again, still kind of stabilized, but PCE deflators were higher. And the problem is people are like, oh, look on year, things are slowing. It's like, no, but look at month on month. People, like myself sitting here, I feel that month on month. That's hitting me. That is a big thing in general, which again continues to weigh on spending, which is, I think, going to continue to get worse as inflation expectations go up. Kansas City Fed Services came in negative, but then when you look at spending, so this is looking at retail, credit cards, and the rates that are being spent. Like, so you have over $1 trillion in credit card debt, and they're now the interest rates are now at 28%. So again, you can see how that compounds. It takes time, but this is what kills the consumer, is the inability to continue to expand the credit card, and credit cards, forcing denials. We're saying, look, your credit card balance is too high. We cannot increase that anymore. Then when you look at the income needs to afford a house is $110,000. So when you look at the median household income and look at that explosion from 1970 to today, this is what the Fed has essentially said, where we have to choose. It's either wage price spiral, asset prices come down. Based on what we talked about in this previous econ show, we talked about how they've chosen to bring down asset prices by increasing rates, putting that pressure there, which again is going to continue to push things lower. So that's what we have for you today. Hopefully you have a great weekend. Happy Halloween. Hopefully everyone has a great and safe Halloween. Hopefully this isn't the last show that we're talking. If anything you can do to support us in any way possible would be greatly appreciated. And hopefully we'll talk to you next week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.